Okay, so since we weren't allowed to use E, we velocities. No E's. And just for in case, velocity is distance divided by time.
That's it.
Our values are authentic, creative, wisdom, and reputation.
Okay. Good. Thank you. Welcome.
So what happens is you are taking over an existing business. So welcome to the company. You have been recruited and employed, and we'll see what the consequences are going to be. But you're all starting off, like I said, at exactly the same point. And normally after the first couple of steps, the companies start differing because people make different decisions. You're all set up with a warehouse level 1, which means you can carry 20 items in total in that warehouse. If you wish to expand your warehouse, you can go to level 2 or level 3, which will take you up to a maximum of 40 items if you're level 3, but it comes with costs to expand, etc. We're also going to be operating in 3 different markets. There they are. In the market 1, you'll see there are value adds. I'll talk about those later. We have some sales teams, and I'm going to set you up in your business now. All of you will start operating in region 1, but I'm going to allow you to expand into the regions fairly quickly, which means you can go and compete in any one of those regions. Let's go to your receivables, to your debtors. What I'd like you to do is take 3 black rounds and put it onto 60 days. So what this means is that your predecessors sold to their customers on 60-day terms.
On 50 days.
Receivables. 30 days. So just have a look at your debtors and creditors, or your receivables and payables, and tell me what you see.
Got a lot of money caught up where
we got a lot of money in 60 days. So yeah, the DSO, we spoke about DSO being one of your key matrices, is maybe not looking that great at this stage. And you have to do something about it. What can you do about it? I'll leave that up to you when we get into the simulation. Remember, you're going to be competing against other teams. Well, the second area in your file is the business process section. I will take you through the business process in detail, and we'll all work together step by step through the business process to make sure that everybody does the same thing, different decisions, but the steps are covered in the simulation. Debtor days referred to in other circles, but you guys talk about DSO. Now, up front, DSO, what is the current benchmark in the organization as far as DSO is concerned?
40 days.
40?
It varies actually from a region to region.
From region to region.
Like KwaZulu-Natal was originally, I know,
42 days.
It was 38 at some point, and then it went up, and then it came down. I think Joburg is on a 42 year. It just varies. I think it's more or less an average of about 40 across the entire business.
Listen, Scott. Do you need any discounts?
I'm prepared to make the discount. What's the value of the order?
It's 200.
Oh, that's decent. So we'll have a look at discount on cash. I'll give you 5%.
5%.
Yeah.
The cost is 6.
Let's see how it works out, because I just need to look at the denomination. So we're talking 21.
At some
21 times 6% is 1.2. So I'll give you. Let's be decent. I'll give you a 1.5 discount on that. So you have a purchase variance of 1.5, which means you have to give to me 19.5 million cash.
20.
20, I'll give you 500 change.
We've got the sales directors. Welcome to the market. Very welcome. Right, are we ready? Order TT1. Going, gone. So we've got all 5 of you being exceptionally competitive here on order number 1. What about niche marketing? Let's see. So I'm just going to take randomly 2 here. Here we go. We've got our first little one from. They've changed your name.
But we did, it's
That's a reject.
So we've got Bang for Bucks, the new, they've recently had a,
bucks.
they've recently had, so they've recently had a little bit of a name change, but anyway, it's not, let's do have these issues once in a while. I've got Emirates and Bang for Buck. I go through the whole process here, I make sure that the numbers are correct, I see what they're giving away as discount, ooh, I see what they're giving away here, I then look at Y02, that's all correct, ooh, lovely, they're giving it over here, I look at different things here, I look at my notional price, and I look at my notional price, and Bang for Bucks, you guys are just too expensive, so I take this, who's Bang for Bucks? And I'll take your order, and I'm like,
Scary. Right, I want you to do the balance sheet now, folks. Literally what you have to do is count what's on the board and transfer it into your balance sheet.
It's 4 million. Right, we've got 4, which would then be 16 million, right?
Sorry, stock number is 3.
And then brown, we've got 2, which would then be 8 million. I didn't get the first 2, the 3 and 2. So.
Just have a look at that operational revenue figure versus the volume. So if your salespeople don't sell, if there's nothing coming in at the top of the funnel, you're going to have a problem further down the line. But that's not the full story though.
So we listened the past 2 days to all the presentations that was given to us that you must have a proper funnel to sell as much as you can. So we listened, they didn't listen.
Thank you for that. Let's look at discounts. What did you do discount wise?
Nothing.
0 discount. Thank you. Team B?
9.75.
9.75 million discount. All right. Team C?
2.5.
2.5. And D?
30.
You gave away 30. Where did I? 30 million bucks. Let's say I can add 20 of that back to it. It would make a huge difference to your bottom line. So giving discounts like that is like giving money away. But we know that you have to look at that because it does have a competitive, causes or has an impact on your competitive advantage at the end of the day. But in any business, you'll have some sort of policy that says, we treat discounts as follows. And if you want to exceed the discount amount, often you would have to go to management and say, listen, this deal needs to go through, but it means that we have to give this discount so that they can consider the impact of that. Especially in an organization like DSV, where we look at the net income percentage of the organization ranges in the 6.2%, I think was the last figure that I calculated. So by giving a whopping discount, you can easily take out that net income for the organization. So that it's what? It's as a result of you went into region 2, you went into region 3.
Yeah.
Nothing happened there. You increased your warehouse size from level 1 to level 3, and that came with a whole range of operational costs. All right, so the pressure now is on the salespeople in 3 regions to make it happen. Because you've got to cover those other external costs. You can't get away from it. Gross profit margins. GP margin. Selling at, Team A was selling at 57.1, which is very good. It's very high. So what killed you?
The expenses, and we sold at a lot of volume.
Volumes and expenses came and killed you. Your margins are good, so the mix of the product that you were selling was good. Can you waltz? Nobody? Well, when I got married 680,000 years ago, I had to open the dance floor with a waltz. And can you tell us what is the rhythm of the waltz?
1, 2, 3,
1, 2, 3, 1, 2, 3. Very simple rhythm, and it's been kept simple so that men can dance. That's the main reason. Folks, we also have what we call a finance waltz.
Then I can't.
All right. Well, the finance waltz is as simple as 1, 2, 3. And I'll take you through that quickly. The finance waltz. Can you tell me what are the three key financial statements that we normally look at in business?
Income,
Income statement,
Balance sheet,
balance sheet, and the third set of statements?
profit and loss.
Well, that's the income statement.
Expenses. General ledger.
Nope.
Cash flow statement. Cash flow statement.
Cash flows. There we go. Thank you very much. And you get guys that will say there's a number 4, which is your statement of equity, changes in equity, etc. But we're going to look at the first 3. There they are. Income statement, also known as the P&L, and with new terminology, people refer to it as the statement of comprehensive income. But we know it as the P&L or the income statement, the old terminology. The second one, we've got balance sheet. And the third one, we've got the cash flow statement. And there it is. 1, 2, 3. There we go.